Does the property market ever drop? Short answer is yes. Yes, the property market drops, but it's not like you would think. Different markets operate on different cycles. I'll get into that with you today. My name's Thomas O'Regan. I'm a buyer's agent. I help people build wealth through investing in property here in Australia. I have 9 investment properties, and what I do for myself is exactly what I would do for customers to acquire properties. Now, I'm just want to run you guys through today on this board the difference between like a blue chip market and a normal market. Everyone thinks blue chip markets are the be all and end all in property investing, but to be honest, only mum and dad investors invest in blue chip markets when it comes to residential real estate. And the reason is because there's no cash flow in blue chip markets. Generally, there's no neutral or positive cash flow in blue chip markets. And ultimately, the fact that it doesn't have cash flow, the fact that it's negative in cash flow means it doesn't matter how much your income is, how big your income is, you'll be capped out, you'll be limited in how much property you can borrow and purchase. Positively cash flowed properties generally will have a much larger cap at the point where you cannot get any more, right? Because the fact that the property is a positive cash flow means that you can continue to buy, continue to grow, and the fact that you will get capped out at about a quarter of the growth, or maybe about a half of the growth that you would if you were to buy positively cash flowed properties, outweighs the superior growth rate of the blue chip market. Let's just demonstrate that here today. I went on a bit of a tangent there, but what I just wanted to show to you guys was the difference between a blue chip market and a normal market, okay? So this is why people just love blue chip markets. They love them so much. People that don't really have much experience investing, they just love the stability of a blue chip market. So if you look at the growth rate of markets over a 30-year period or a 10-year period, you can get an average growth rate of how that market's performing, okay? So, and this is kind of how a blue chip market would perform. So, you know, in a perfect world, that's how a blue chip market would perform. And what is that? What does that line represent? That line represents, say, a 7.5% growth rate per annum. Not bad. So what is the blue chip market actually doing in terms of the property values along the time? Say like this is a 10-year period, year one, and year 10, okay? What is the property value actually doing? That's what the rate of the market on average over a 10-year period. But what is the market actually doing over a 10-year period? It's going like this. It fluctuates a bit, right? Notice it doesn't fluctuate too much. It's not crazy fluctuation. It's fairly stable. And that's why people love blue chip markets, okay? Because they're stable. Okay, here's another market. It's not a blue chip market. It's not performing as well, unfortunately, but that's just what it is, okay? What's that market doing? It's probably performing at a 5% growth rate per annum. Okay? That market is performing at a 5% growth rate per annum over a 10-year period. Some years it might have no growth, some years it might have negative growth, some years it might have, 25% growth rate, whatever. This is what it looks like. A non-blue chip market, this is what it looks like. Went off the charts. Let's just forget about that part. Okay. That's crazy. This market looks very unstable. Market looks very unstable, okay? Now, why would you invest in this market compared to this market? This market's stable and it's growing faster. This market doesn't even grow as much and it's all over the place. I'll tell you why. Cash flow. Cash flow. That's why you'd invest in that market. This market, negative cash flow, it's costing you money. It's going to cost you money to own property in a blue chip market. And you will not be able to acquire as much assets. Now, if you understand this is how you can really take advantage of this, right? If you can see that the average growth rate in a non-blue chip market is at 5% per annum over a 30-year period or a 10-year period, a long time period, and you can see that the market has underperformed, it's underperformed for a very long time, like 5 years, that's where you buy. This whole period here, this whole period is buy time. Buy this property. Why do you buy it here? Why do you buy it here? The reason you buy it here is because it is very, very, very easy to negotiate on these properties. The market is dead. No one wants to buy. The seller's trying to sell the thing at the wrong time and they cannot sell it. So you come in and you negotiate a very good deal. So the market might actually be here, right? But you negotiate a deal down here. Right. The market's already doing nothing and you've negotiated the property even lower because no one wants to buy. But why did you buy there? Why did you buy in this market that's doing nothing? Because you know the average growth rate is 5% per year because you've done your research and you can see the market is underperforming, meaning at some point it's going to have to rapidly catch up to the growth rate that it should be. Okay. How can you mess this up? How can you mess this up? Okay, if you buy it here, don't buy it there. Just do not. Don't buy it there, okay? Right, but another reason to buy this non-blue chip property is because it cash flows. Okay, this property cash flows. This one, negative. Okay, sorry about my writing, guys. It's pretty bad. It's pretty bad. I know how to invest, but my writing sucks. Anyway, I just want to point out another pitfall in this market, right? This blue chip market will most of the time, 99% of the time, be hot, meaning you can sell the property at any time. That's what it means by stable. At any time you can exit the property. This one, there is only certain times in the market where you want to exit the property, and that's here in this area where the market is very hot. And this whole area is a hot market, right? When the property market's going up, it's a hot market. So if you were to sell, you'd only sell here. But again, the property is cash flowing. So whether you're selling it or not, it's not that hard to hold. Like if the market was flat, say if it was on its next 10-year growth cycle and you were in a flat market, the thing still cash flows, all right? The thing is still positive cash flow. So you could disappear for 10 years, you could go on holidays and come back 10 years later and everything's fine because the property the income from the property covers the entire expenses in the mortgage. So it doesn't matter. That's how it's de-risked. That's how you de-risk these property types. You got to cash flow them. They got to be cash flow positive. Over here, the risk is blue chip market. The entire time, the risk is if you lost your job, how are you going to pay for the property? Because it's negative. It's a blue chip market. The rental income doesn't cover the expenses. It's going to be negative cash flow. If you lose your job, you will have to sell it. Okay? Sorry to say, you're probably going to have to sell it because no one can afford to own an investment property that is negatively cash flowed when they don't have a job. So there's less of a risk here when you sell it because the market's always pretty good, but it is going to be hard to sell it here, right? And it's going to be easy to sell it here, whatever. But this is the problem novice investors have when they buy in blue chip markets is the markets are so hot. There's 30 people going and putting an offer on every single property and you keep missing out and you're like, I just want a property. I don't want to miss out anymore. And what people end up doing is where the market's at, they end up paying over market. And if you pay over market at the peak of a blue chip market, the point when it gets back to normal growth, hold on a minute. Let's put that up there. Say if you bought at the peak of a blue chip market, you would have a long time before the actual normal market caught back up to where the price is that you paid for it. So you could lose money, and it's very easy to pay over market in a hot market. Don't do that. All right, guys, hopefully this helped. Happy investing. If you need any help, just reach out. This is no financial advice, but I do have 9 properties and I'm just speaking from experience. Ciao.